All right, let's talk about our first ICT Silver Bullet setup and the time at which it forms. Now, again, this is a time-based model. That means these things are linked to a specific 60-minute interval or window in time. Every single trading day, this pattern will form. It may not be in the Forex pair that you're trading. It may not be in the futures contract that you're trading. It may not be in the asset that you're specifically looking at, but it does form every single day. First setup time is 3 a.m. to 4 a.m. Now, we're always referring to New York local time. So whenever I'm referring to a specific time, whether it be a window of time or a very specific time of the day, you have to have your charts calibrated to New York local time. Wherever that is, whenever that is, in your area. If we're observing daylight savings time, then you observe daylight savings time. So that way it removes all the uncertainty, the confusion, whatever it is in New York, that local time, that's what you're using when you're charting. This is the London Open Silver Bullet. So what we're looking for is a classic ICT fair value gap to form between 3 a.m. and 4 a.m. New York local time. The factor at which you are going to lean heavily on is the skill set of knowing where price is going to go to. Okay, and it's not necessarily the bias. You just predominantly have to consider where the next draw on liquidity is. Is it going to go above the marketplace for buy stops or trade into inefficiency above current price action if you're bullish? In this case, the market was bearish. It was looking to go lower, and there was an obvious sell side liquidity pool resting below that old swing low. And between 3 o'clock and 4, the market created a fair value gap. We had a shift in market structure below this low here. So this is your classic what? Optimal trade entry. Fair value gap here. The market shows the willingness to support this idea with the bodies staying inside that gap. See that? Now at 4 a.m. it does pump one more time just above it, but that's fine. It would have never stopped you out with the rules I teach with all of my models here, especially the optimal trade entry. The idea for this would be to look for a minimum of, what market is this? It's a futures contract. So that means, does it offer the potential for 10 handles? So from here down to here, trading below this low, not just to the low, but to it and through it. So it's reasonable to anticipate a potential run of 10 handles. We don't require that, but going short inside that fair value gap, the formation of the ICT Silver Bullet, the entry is taken inside of that 60-minute window between 3 a.m. and 4 a.m. It does not mean that the trade is entered and is exited in the same 60-minute window. In other words, your trade many times will be held over the 4 o'clock hour and into 5 o'clock in the morning, and maybe even rolling over into the New York session opening at 7, 8 o'clock New York local time. But in this instance, we would be aiming for this low and the sell side liquidity resting below it. So does it offer from this entry here down to here at least 5 handles for you to book in profit? It does so. The framework was, could it get to 10? It could do 10. We don't require that. Shorting into fair value gap, covering at the old low, allows for at least 5 handles, and that's what the ICT Silver Bullet is. This is my actual model for my son Cameron. All right, the second one in our continuing list of ICT Silver Bullet setups is the AM session. Now this one is focusing on the 10 a.m. to 11 a.m. always New York local time. And let's take a closer look at this one now. Okay, so we are looking at the E-mini S&P once more. And the idea is between 10 a.m. New York local time and 11 a.m. we wait for when the market's bearish. Relative equal lows, there's sell side resting below that. We have a fair value gap, bearish Fair value gap, it trades up into it between 10 o'clock and 11 o'clock. We can sell short there. Does it offer 10 handles? Well, from 41.46 or thereabouts to 41.36, that range doesn't even get us down into this low, let alone below that one. So it obviously meets the criteria of a minimum of 10 handles. In framework, it does not mean you're trying to get 10 handles. It just means that it offers 10 handles. So going short here, collecting 5 handles, that could have been done inside of the scope of that 60-minute window. Not that you're trying to do that, as I mentioned briefly moments ago. The trade is many times held in duration longer than the window that the framework and entry is derived from. So it's not a in and out within the same hour. It means that you're looking for the setup to form to get you into the trade within the scope of 10 o'clock to 11 o'clock New York local time. All right, and finally we have our last ICT Silver Bullet here, which is framed on 2 p.m. to 3 p.m. New York local time. And this is the PM session ICT Silver Bullet setup. In this one here, we can see that we traded down into a higher time frame, 15-minute discount fair value gap, and you're encouraged to go into your charts to see that is in fact what we have here. The market trades down into it, shifts higher. A swing has been broken to the upside, so we have a shift in market structure and a fair value gap. So any retracements back down into that, look at the bodies staying inside that. The wicks did the damage, but the body's telling you the narrative. The story is told by the bodies. So it's telling you it's respecting this buy side imbalance, sell side inefficiency, or fair value gap. Going into 2 o'clock, we rallied and we created a small little fair value gap there. The market drops down into that before taking out the relative equal highs buy side liquidity and or returning back to a premium sell side imbalance, buy side inefficiency, or fair value gap that would be above the market here and here. So if it's going to rally here, the framework could be on the optimal trade entry here and taking the first fair value gap that forms inside of and reprices to between 2 o'clock and 3 o'clock. That's happening right there. So from here all the way up to here, does that offer 10 handles? Yes, it's actually offering 12 or more. So this entry here is a high probability condition that lends well to a run into inefficiency in the premium and to take buy side out as well. So that is a very handsome run there and trading between 2 o'clock and 3 o'clock. Now some closing thoughts. If you're new to my channel and you're seeing this, you don't have enough to trade this pattern. So you have to back test it while you're learning how to read price action and determine where the next draw on liquidity is going to be for the next price swing for whatever asset class you're trading. So don't be discouraged if it seems like it's just cherry picked and there it is, because I actually traded many of these types of setups either with calling it out on Twitter or mentioning it in passing while actually doing executions and recording it. So these patterns, these things form, and I called a few of them real time on Twitter last week, and many of you, much to my disapproval, because I don't like when you take the setups as a trade setup signal. I don't want you to view it like that, but many of the followers on my Twitter feed actually showed that they took the trade I called out with using a silver bullet. So the pattern works. It's highly, highly consistent. It's extremely high probability when you have all these factors in mind and they are present in price action. It gives you a rule-based idea to look for a time-based model. So time and price is being utilized here, which is where the focus of my analysis concepts and teaching as a mentor, teaching my students how to find something that repeats. You can't get anything better than having a specific 60-minute window of opportunity that forms every single trading day. Every single trading day, one of these setups are going to form. Now, if you don't have a plethora of markets to follow, ideally 1 or 2 at best while you're first learning how to do it. Even if you grow to a point of interest where you have a lot of markets that you're trading, a lot of pairs or a lot of futures markets and such, you'll find that over time, the longer your career will be, your list will reduce down to 1 or 2, at worst maybe 3 if you want to be a deviant. But my advice is for you to be a specialist. Try to focus on one market, because if you can do that, one of these specific ICT Silver Bullet setups will form every single day. Meaning that if you just follow one market, you can get your setups there. You can make your bread and butter. You can make your ends meet. You'll have losing trades. Okay, it's going to happen. But by far and large, you can do things with one market. And if you don't get the setup in London, you wait for it in the AM session. If you don't get it there, you wait for it in the PM session. But every single market, every single trading day will offer one of these. So you have to be disciplined. You have to focus and look for these ideas to form in price action. And should you do that, you'll need to look at nothing further than this. You don't need to go into any other models. You don't need to go into any other teachings. You don't even have to come back to my YouTube channel. You'll never have to do any of that stuff anymore because you'll be independently minded and your analysis will be uniquely yours. You won't have to look at external sources like me or someone else to provide that to you. You'll trust yourself, which is a very empowering state of mind. And that's always been my target and goal with all of my students.